Ladies and gentlemen, welcome to our 4Q and full year 2022 earnings conference call for Castrol India Limited. Please note that all participant lines will be in the listen-only mode, and you can ask your questions after the opening statements. If you need assistance during the call, please press star then 0 on your touchtone phone to reach the operator. We have with us Mr. Sandeep Sangwan, Managing Director, Castrol India Limited, and Mr. Dipesh Bakshi, CFO and Whole-Time Director, Castrol India Limited. I now hand over the conference to Mr. Sangwan. Thank you, and over to you, sir.
Thanks. Good evening, everyone. I hope you can hear me clearly. And thank you for attending Castrol India's fourth quarter 22 earnings call. My sincere gratitude to you for taking out time and joining us at this hour. Due to some key business meetings which were unavoidable, we had to schedule this call today in the evening instead of market hours on the next day, which has been our usual practice. Both I and Dipesh are joining you straight after our fourth quarter board meeting. We've just disseminated our annual and fourth quarter results a few minutes back. We are pleased to share that Castrol India Limited has delivered a resilient performance in the fourth quarter and full year ended 31st December 22. I would like to highlight that Castrol India follows the Jan to December calendar year for its financial reporting. Our fourth quarter 22 performance was in the backdrop of extreme forex and inflationary pressures arising from volatile crude oil prices, leading to rising costs of additives and base oil. To safeguard our margins and deliver bottom line growth, we employed rigorous pricing and cost management decisions. The inflationary and forex pressures are likely to continue in 23, although we started seeing some softening in base oil and crude prices, but our topmost priority will be to continue driving growth, protecting our margins, making our employees and business future ready, and strengthening Castrol's enduring legacy of innovative brands and reliable services with our customers and consumers. To begin, I invite Dipesh to take you through our fourth quarter numbers and financial performance in detail. Dipesh, over to you.
Thanks, Sandeep, and good evening to all of you. I would also like to thank you for joining us at this hour and for your continuous engagement with Castrol India. Today, we announced our 4Q and full year results for 2022. Let me share some key financial highlights. In the fourth quarter of 2022, we have reported a strong financial performance. Our revenue from operation was 1176 crores, which was up 8% compared to 1091 crores in 4Q 2021. This is also 9.6% above the sequential quarter of 3Q 2022. Our profit before tax was 248 crores. This was lower by 3% compared to 4Q 2021 and lower by 2.4% in the sequential quarter 3Q 2022. With our 4Q 2022 results, we have also recorded 4,774 crores as our annual revenue from operations for 2022. This is a growth of 14% compared to 4192 crores in 2021. Profit before exceptional items and tax stood at 1093 crores, marking a growth of 6% from 1029 crores in 2021. In addition to an interim dividend of 3 rupees per equity share, the company's board of directors in the meeting today have recommended a final dividend of 3.5 rupees per equity share, each for the financial year 2022. Of course, this would be subject to shareholders' approval. This 3.5 rupees was compared to last year, 50% higher dividend. Overall, we remain confident of our strong business fundamentals and long-term profitable growth in India. I would now like to hand over the call back to Sandeep.
Thanks, Dipesh. Apart from financial performance, I would like to draw your attention to some key business developments at Castrol India. In November 22, we announced a partnership with Key Mobility Solutions, or KMS, to leverage each other's strengths and expand India's automotive aftermarket ecosystem via MyTVS. KMS's digitally integrated multi-brand service platform for two and four-wheelers. The all-cash deal included a 487 crores investment by Castrol India and acquisition of about a 7% stake in Key Mobility Solutions, and this transaction was completed in January 23. With this strategic investment, we aim to expand our presence in service and maintenance for both internal combustion engine and electric vehicles and leverage MyTVS's digital and operational capabilities. This alliance will also offer potential for Castrol and Key Mobility Solutions to collaborate and partner in select markets beyond India. Castrol's future-ready strategy focuses on an enhanced play in service and maintenance, foray into new segments, including automotive aftercare and electric mobility. In fourth quarter 22, we expanded our service and maintenance network with 230 Castrol Auto Service Centers, about 5,000 Castrol bike points, and 40 plus Castrol Express Oil Change outlets across India. With the EV space evolving rapidly in 22, we supported 200 top-tier car and bike mechanics in Delhi and Chennai with our Automotive Skill Development Council certified EV readiness training. This year, we plan to extend our training to mechanics in other cities across India and help create an ecosystem enabled to serve EVs better. In 23, we will also launch our Castrol On range of EV fluids for the aftermarket and collaborate with two-wheeler and four-wheeler OEMs to support their EV transition. On the brand side, Castrol Active is one of our leading premium engine oil brands that is trusted by consumers. In fourth quarter 22, we launched a new marketing campaign, Compromise Mehenga Padega, for Castrol Active, demonstrating Active's superior protection for bike engines and how it shields bike owners from expenses related to engine breakdown. Health, safety, security, and compliance are some of the key pillars on which we operate our business. I am pleased to share that Castrol India was authorized by the Directorate of International Customs as an economic operator, Tier 2 certified organization, in recognition of the high safety, security, and compliance standards demonstrated by us. On that positive note, I'd like to thank you for your attention and would like to open the session for your questions, feedback, and views. Thank you.
Thank you, Mr. Sangwan and Mr. Bakshi. We will now begin the question and answer session. If you wish to ask a question, please press star and 1 on your touchtone telephone. If you wish to withdraw yourself from the question queue, please press star and 2. Participants are requested to use handsets while asking a question. Also, in lieu of the time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Ladies and gentlemen, let us wait for a moment while the questions come in. Reminder to the participants, anyone who wishes to ask a question may press star and 1. The first question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, good evening, and thanks for the opportunity, sir. Sir, if I look at full year number, is it fair understanding that the large top line has grew almost over 13-15%? So large part of the growth has come because of price or volume both. And second, on core business, we were working on to enter into CV OEM, and so what is the status of that? I have second question. I'll come back in queue.
Yeah, so I can take that. I think you're right. The top line growth has largely been driven by pricing, but there is volume also in. So our volumes have grown versus 21. And in fact, if I take the pre-pandemic normal year 2019 also, versus that we've grown our volumes. But given that it was such an inflationary environment where cost increases were hitting us month after month, especially during the first 9 months, the priority was to balance margin protection and volume, and I think we've managed that very well, delivering a bottom line growth of about 8%. So that's the first bit. I think as far as commercial vehicles are concerned, your second part of question, we play very actively in the commercial vehicle segment. Okay, we have some OEM relationships that we have established, and I think our strategy is to continue to be a premium branded player, which we continue to do, and support our commercial vehicles category with innovations with new products. So, for example, all our products are BS6 compliant. We also introduce a product which is relevant for one of the large OEMs in CVO market. So we'll continue participating in the commercial vehicle segment.
So, I mean, taking forward to your first answer, is it possible to give some kind of a broadly volume and value growth, if you can? I mean, how much is because of the volume and how much is the pricing? And currently, what is PV contribution in our overall business?
Yeah, so commercial vehicles contribute to about, let's say, about between 25 to 30% of our business. From a margin perspective, the volume contribution is a much higher because margins are better in personal mobility sector. And I think on volume and turnover growth, Dipesh, do you want to take that question?
Yeah, sure. Thanks, Sandeep. So I think on a full year basis, we have grown volume from 208 million liters to about 210 million liters. Yeah. What we have, as Sandeep explained, hit by is the cost inputs increase, and that increase on a full year basis has almost been 20% on a per liter basis. And that is what we have tried to recover during the year through pricing intervention.
Thank you, Mr. Sheth. In the lieu of time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Thank you. We'll take the next question from the line of Hemal, an individual investor. Please go ahead.
So thank you for the opportunity. Just want to clarify. So just based on that, the October-December volume would be around 48 million, approximately. Is that accurate?
Yeah, that's right.
So that'll be like a 10% volume decline year over year. Is that also accurate, or?
No, that won't be accurate. I think the volume decline only in the fourth quarter, I would say, is in the range of 4 to 5%.
4 to 5%. Okay. The other part of the opening remarks was that the base oil price seems to be stable, but the additives price costs have continued to increase. So are you continuing to take any price rise going forward in January, February, or you think the price rises have now peaked? If you can throw some light on the reality of the competitive market space that you're playing, because the EBITDA margin obviously suffers because of that. So is price rise a further possibility in our business going forward?
So let me answer that question. First of all, I think in the year 2022, given the strength of our brand of Castrol in India and the trust that consumers put on our brand, we've been able to protect our per liter margin. So that's the first kind of fact I want to put on the table. And as I said in the beginning, our intention was to protect our margins and balance our volumes. Coming to the cost pressures on additives, I think cost is a combination of multitude of factors. There's base oil, there's additives, there's forex involved, and we have a pricing strategy which we adhere to, and we are a premium branded player. Now, depending on where the cost environment is, we will take pricing actions in line with our strategy, but our intent is to continue delivering value to our consumers and customers. So I cannot say for a definitive answer there will be further price increases, decreases. I think we'll continue monitoring the environment as we've done in 22 and take appropriate pricing actions that help grow the business but also deliver value to our consumers and customers.
Okay, sir. Thank you for the opportunity. Appreciate it.
Thank you. The next question is from the line of Abhijit Bora from Sharekhan by BNP Paribas. Please go ahead.
Yes, sir. I missed upon the annual volume number. Can you just share it again?
Yeah, hi. Annual volume is 210 million liters.
Okay, thank you, sir. That's all from my side.
Thank you. The next question is from the line of Douglas Danbull from Invesco. Please go ahead.
Thanks. My first question is just, I wonder if we could get a bit more of your expectations for the coming year in terms of, I know you've already commented on price, really depends on where cost goes, but in terms of your volume growth expectations, and how you see that sort of balanced against the ability to regain some of the margin that we have lost over the course of this year. That'd be my first question. Would just be some more forward-looking color for coming year, please.
Yeah. So, Douglas, thanks for your question. So I think the way I would like to share with the answer with you is the lubes category we project will grow at about 4% next year. Okay, and there'll be differential rates of growth amongst personal mobility, commercial vehicles, but overall the market should grow at about 4%. That's our projection. And typically we want to grow ahead of the market. So you can a couple of percentage ahead of the market. So that's what our intent is. Okay, but we'll also have to see how the environment plays out. And the second is from a margin perspective. I think, as I said in the answer to the previous question, we've been able to, given the strength of our brand, hold our per liter gross margin level. And intent would be to continue making sure that we are holding those margins or improving those margins. That's what our intent is.
Understood. I think historically you've spoken a little bit about maybe being willing to exchange a bit of gross margin in terms in order to gain some incremental market share and exchange a bit of margin for volume. Obviously, in a high cost inflationary environment, that's challenging. But perhaps you could put just a bit of color around strategically how you're thinking about that volume versus margin trade-off as we look forward.
So while I don't want to speculate on what our future plays are going to be, but definitely our intent is to kind of make sure that we're a growth business and we grow both volumes and top line and not only a margin play. To give you an example, last year we introduced a product called Active Essential, which was at a slightly lower price point than we traditionally played in the two-wheelers category, and that's given us a good growth in a very challenging environment. So we look at all the opportunities that are available depending on where the white space in the category is and where we find opportunities to grow. So definitely something that we continuously think about.
Okay, great. Thanks. And my second question is on the key mobility side. Again, I wonder if you could just give us a little bit of color of how you see that business evolving, what the business model looks like there, and how that and when that might start to contribute noticeably to our financials.
So on key mobility, I think the first thing I'd like to say is it's the coming together of two trusted brands in the Indian environment to serve consumers and customers. So TVS is a very trusted brand by consumers. Castrol is a trusted brand, and we find enough synergies and good synergies between our two businesses to grow the Indian aftermarket ecosystem and make that first of all give better consumer experience to customers, and the second is also digitize that ecosystem. So for example, Castrol has good lubricants. My TVS has good spare parts capability and logistics capability. My TVS historically has been strong in southern India, given their nature that they're based out of Chennai. Castrol is a national player with large scale. We can leverage each other's capabilities in both the areas. And the third is they're developing digital solutions and systems both for the workshops, but also from a consumer traffic perspective, which Castrol can leverage. So it's a creation of a network of service and maintenance where consumers can get trusted services by combining the strengths of both the brands and the organizations. I think that's what the intent is.
Thank you. Mr. Tandul, in view of the time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Thank you. We'll take the next question from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, sir. Thanks for the opportunity. So taking the previous question forward, would you explain, would you elaborate how that partnership with TVS Group is going to benefit Castrol? Because I have still not understood how that partnership will work and how it will benefit Castrol.
I think it will benefit Castrol in multiple ways. First is it will give us lubricant supply in Key Mobility's network. They have a network of workshops. If you remember, 2 years ago, they bought the Mahindra First Choice business also, which is a part of Key Mobility Solutions. So first of all, it extends our workshop reach in terms of selling our traditional lubricants businesses. The second is, as I said in my opening note, we're also creating a network of workshops. We have 230 Castrol Auto Services. We have about 5,000 bike points that we serve in India. And we just started our journey on express service on GeoBP outlets. There's about 40 of those. So with Key Mobility partnership, we also get capability to supply spare parts through Key Mobility to our network of workshops. And the third is we will drive joint marketing programs to deliver better services to consumers either in the Key Mobility network or our network. So that's how the ecosystem is evolving. Plus, both of us have very good digital tools that can leverage capabilities of each other in terms of serving consumers. And the other thing I'd like to state is everything will be respecting competition law, so within the regulatory framework of the country.
Okay, sir. Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, thanks for the opportunity once again. So now taking forward this Castrol Auto Services where we have been expanding also, and what kind of expansion plan do we have for future, and how do we see this with the Key Mobility synergy, and how much additional in, say, what is our aspiration of taking this whole additional volume growth of what kind of a sense, if you can give some kind of a sense? And this is largely for two-wheeler passenger vehicle or CV, if you can give little more color on that also.
Okay, so I think on Castrol Auto Service, we have 230 workshops. These are workshops which are not owned by Castrol. These are entrepreneurs who run these workshops, but we give them branding support, training support, and making them more professional, where consumers can get trusted service. And our effort is to continue expanding this network. At the same time, we're conscious that this has to be a quality network rather than just sheer numbers. So we're very focused in terms of the kind of workshops we enroll in this program. The second is this the two segments. Castrol Auto Service is for four-wheelers, passenger cars, okay? Whereas on two-wheelers, we have something called Castrol Bike Point, okay, which tend to be two-wheeler workshops. So right now we're focused on building those, and on GeoBP sites we're focused on building express oil change centers. As I said, we have about 42 of those. So that's the kind of aspiration. And I think when we enroll these workshops in our network, they tend to use our products because consumers see Castrol signage on outside of the workshop, and that gives them the trust of saying that in this workshop I can get a quality lubricant. So it extends our volume gains by selling more products in these workshops, and our share of lubricants tends to be pretty high in these workshops. So that's the whole play. And I'd like Dipesh to add. Dipesh, do you have anything to add on this?
Yeah, Sandeep, thanks. So just one more build, I think you also asked. So what are the workshops in Key Mobility? So in Key Mobility, they have both four-wheeler and two-wheeler workshops. Yeah. So in terms of the lubricant supply that we spoke about earlier, we will supply lubricants to both kind of workshops.
Then how do we see synergy between this our own initiative, Castrol Express for this two-wheeler, then Castrol Auto Services for four-wheeler, and key mobility? What kind of a synergy again? And so largely since we will be playing in southern India market through key mobility, so is it fair understanding that this Castrol Auto Service will focus on North India and other part of the country?
No, so there is no restriction on focus on where key mobility plays and where we play. I think both networks will play across the country. What I said is historically the development of my TVS brand has been from southern India, but there's no restriction of any sorts on where we will participate. I think both are independent companies and they'll continue participating. The synergies is about partnership on where we have capabilities that complement each other in delivering a better value to customers. So, and there's enough space in the Indian market, if I look at the Indian aftermarket, for both of us to play comparatively to create service and maintenance networks.
Thank you, Mr. Sheth. In lieu of the time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Thank you. The next question is from the line of Abhijit Dora from Sharekhan by BNP. Go ahead.
If I do the back calculation, your Q4 number works out to be around close to 55 billion, but that shows around 8% growth on a YOY basis. So is that the correct calculation? Because in the earlier remark you mentioned that it is a decline of 4 to 5%.
Yeah, I think Dipesh answered that question in terms of what the volume was. Our volume was about 48 million liters in fourth quarter. So I don't know how you get to a 55 million number, but maybe you can take that offline.
I just did the back calculation from the earlier volumes.
No, so let me just come in. Our 4Q number is roughly 48 million liters. 4Q 21 was around 50 million liters. So that is a drop of about 4.5%.
Okay.
Yeah?
Okay. Okay. Thank you, sir.
Okay. Thank you, Abhijit.
Thank you. The next question is from the line of Danish Mistry from Investor First Advisors. Please go ahead.
Yes, hello. Good evening. Thank you for taking my question. I had just one question regarding your gross margin. If you could just help us understand, I think they've compressed about 300, 400 bits. So obviously there's some impact of RM here, but do you think that's abating now, and how do you see that playing out going forward? Thank you.
Right. So in terms of the gross margin, obviously, I can't share the exact numbers, but we've had some reduction in the gross margin compared to the last year, 4Q 2021. Mm-hmm. However, when you look at a full year performance, I think our gross margin has gone up. In terms of, you asked, so how is it going to be looking forward? I think Sandeep had answered that question earlier. I think we would aim to maintain the gross margin. Of course, the focus is also on growing market share and balancing that with the response that we will have in the market depending on how the input costs changes. As you know, Forex continues to be challenging. We are seeing some softening on the base oil, which is an input cost, but some of the other input costs seem to be challenging. So, it's going to be a wait and watch situation. Having said that, in the fourth quarter, given the challenge on the volumes as well as softening of the base oil, we did make a pricing intervention in terms of dropping the prices on some of our products as well. So that is a strategic pricing decision that we take, looking at not just one quarter but at least a full year view forward.
Got it. So when you said that you'll try and maintain the gross margins, is it the full year gross margins that we try and maintain, or the Q4 gross margin that we try and maintain?
So I think we look at our P&L on a holistic basis. So it's not kind of saying, okay, month to month or quarter to quarter. We look at a full year and see what is best for the business to keep growing the top line, but also balancing the margin.
Got it. Okay. Thank you very much. Thank you so much.
Thank you. The next question is from the line of Harsh Maru from Emkay Global. Please go ahead.
Yeah, thank you for the opportunity, sir. My first question is regarding the QOQ, like YOY volume drop of about 4 to 5%. So if you could give us some color on which segments didn't perform well. And the second question being, in terms of our after-service expansion that we are trying to build in terms of auto service parts or the bike points, etc. So what is the kind of gross margins that we are targeting? Say, is it roughly in terms of what the core business is, or it's some few basis points here, like up or down? You could provide some color on that. That would be my second question.
Yeah. Harsh, sure. Thanks for that question. So on the volume change between Q on Q, in the personal mobility segment, we did quite well, which is our bikes and car portfolio. I think where we had the volume loss is mainly in the industrial side, right? And some bit in the commercial vehicles as well. You had another question, so you just remind me?
Yeah.
Oh, yeah. Your question was on auto services, what kind of margins we will maintain, right?
Yeah.
So
and is there some kind of a service element to the entire business besides the core lubricant sales? So if you can elaborate on margin profiles around that.
Yeah, sure. So I think on the Castrol Auto Services, the margin is not intended to be exactly in line with the core business. It is a volume that we are after more than the margin in that kind of more business model. Service element, that is the intent. I think it will be a transition and gradual phasing as we establish our business model. As we ramp up and we get the complete model right, we will start going into the service as well.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Yeah, sir. Thanks for the again opportunity. Sir, you said now service business we are working on to establish the same, and then we also like to have that service business good margin. So can you give some color how long this process is? 1 year, 2 year, 3 year, and when do we really see that we can start contributing to our top line as well as bottom line meaningfully? And second thing, what is our aspiration over 2-3 year time from all with our key mobility and to get additional volume as well as our own services?
So I think Dipesh has outlined how we want to kind of grow our service and maintenance business, and definitely take a few years, whether it takes 2 years or 4 years, only time will tell. But the intent is to start creating revenue streams beyond lubricants. I think the first intent of us has been to create a network of workshops where consumers can get trusted service. I think once they start trusting those workshops or services, we can add on more quality services, both for the workshops and the consumers. So I think to give any projections on margin right now is very difficult because we are also in the establishment and growing phase. But our intent is to start generating non-lubes revenue in the coming years as the growth strategy. But let me just kind of give you an idea. We've also been testing auto care range of products. Okay, for example, as another source of revenue, and we've piloted quite a few things in the last 2 years, and now we feel confident that we can also play in that auto care category, and will scale that effort from 10 cities to a national level this year. So that's one of the intents. The other is we started making our Castrol auto service networks educated about EVs also. So, for example, this year we trained about 200 mechanics in Chennai and Delhi on EV training through Automotive Skill Development Council of India. So we're working on various programs to make sure that the business continues to grow and we keep adding non-lubes revenue.
And so what kind of, additional volume in our core business like lubricant that we can expect from this all with key mobility as well as our own care services?
So I think it's a function of how the network grows, okay, because network growth will lead to volume growth. We have internal kind of business projections which I cannot share because we don't normally share a forward-looking statement in terms of how much volume will come from which segment, but the intent is to grow ahead of the category in the coming years.
Okay, thank you and all the best, sir.
Thank you.
Thank you. Ladies and gentlemen, this is to bring to your notice that the call will conclude in less than 10 minutes. We'll take the next question from the line of Douglas Turnbull from Invesco. Please go ahead.
Yeah, thanks very much. Could I just get a little bit more color around the volume decline in the fourth quarter? I think you said it was good in personal mobility. The loss was mostly on the industrial side and a bit in the commercial vehicles. If you could just explain what caused that volume decline, whether that was the market shrinking, and if so, why, whether there was perhaps some loss of market share. Just help me understand what was going on here, and so what perhaps we should expect for volumes, which I think you said you saw the market growing at 4% next year. How we get from a declining fourth quarter to that kind of growth rate, what the drivers are, would be really helpful. Thank you.
Yeah, let me take that, Douglas. I think there were two or three factors. What has happened is the national oil companies have their own pricing strategy. So their pricing moves have been much lower than the pricing that we've taken, and they traditionally have strong positions in commercial vehicles market. So that was one of the factors where we felt our price premiums, because of our intent to protect margins, were on the higher side, and that's something that we are continuously watching, and we will take actions as required to make sure that we get our share back and volume back. The second is, I think the agricultural sector has been a bit soft. Okay, while commercial vehicles have grown in the fourth quarter in terms of new vehicle sales, the agri sector has been a bit soft, where we felt a bit challenged on volumes. So those are the two kind of key drivers of volume challenges on the commercial vehicle sector.
Okay, and so to get back to the 4% type volume growth for the market, where does that estimate come from, to your mind? What are the drivers behind that?
No, so the category will grow. The category, as I said, when I said 4% growth, that's the lubricants category growth that we're projecting for this for 23 calendar year. Yeah, and I think what we are saying is through our programs, pricing strategy, we should be able to go ahead of that category of 4% on a total lubricants category basis.
Yeah, understood. Sorry, I was questioning what is going to change that takes the whole category from shrinking a little bit in the fourth quarter, or did it not? Was it just that we lost?
No, the category did not shrink. That's what I said. Commercial vehicles category was quite okay in the fourth quarter. We lost a bit of share because of our price positions, and we will take appropriate actions to get our growth back.
Thank you. Mr. Turnbull, in the lieu of time, we will stick to 2 questions per person. If you have further questions, kindly rejoin the queue. Ladies and gentlemen, a reminder that we are in the last 5 minutes of today's call. The next question is from the line of Vipul Shah from Sumangal Investment. Please go ahead.
Hi, sir. What was our overall exit market share at the end of December 22? And what was the same at the end of December 21?
First of all, we haven't got the December reports as yet. I think the market share reports that we get take about, there's a lag of about 2 months. But our latest share is in the range of 20-odd%. And I think our exit of last year was at a similar level. So we've been around 20% share. In some categories, we've gained. In some categories, we face challenge. But overall, we are at the same ballpark.
Okay, sir. Thank you.
Thank you. The next question is from the line of Jagdishwar Topo from Japa Investment. Please go ahead.
Yeah, good evening, sir. Just wanted to understand if you can elaborate on your marketing and advertisement spend for the next few years as to how you want to invest in brand building, specifically in new digital channels such as YouTube or in apps. So if you can elaborate, and how do you see this as a percentage of revenue, I mean overall ad and marketing spend, just because revenue has been increased because of inflationary pressure also.
So thanks for asking the question. I think first of all, as I've maintained, we are a premium branded business, so we will continue investing behind our brands because that's one of the core strengths of Castrol. And if you remember, we continued investing even during COVID years in 20 and 21. We did not take a break on investment, so that's a part of our core strategy. In terms of specific, how much do we invest behind our brand? Dipesh can kind of tell you, can share the numbers with you. Typically, we stay in a range of investment that is, Dipesh, we spend about 3 to 4% of our revenue in marketing support, and we'll continue operating in that range. I don't want to say anything about the future, whether we'll increase, decrease, or whatever, but typically the ranges, and we've been consistent in our investment. Digital is becoming a huge area of marketing investments, and in line with the market and in line with best-in-class brands, digital is also a part of our strategy for marketing investments.
Thank you so much, sir. That was quite helpful, and best of luck.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Castrol India Limited, I thank you for joining this call. You may now disconnect your lines. We wish you a good day.